Hi everybody, in this week's video I wanted to share 4 actionable plans that you could take on to pay off your mortgage early. And at the end of the video I'm going to share my personal best option as a bonus, whatever you want to call it. Is really one that I find works best. Jim Rohn said the reason why most people face the future with apprehension instead of anticipation is because they don't have it well designed. What does this mean, right? So create a plan. Create a plan that you could take on and stick to that plan, right? If we look at the plans that we have available for us to be able to pay off our mortgage early, no plan is going to work if you don't commit to it, if you don't implement it. And some plans work better than others. So I'm going to share 4 plans that I think could be optional, although one of them is really not. And then I'll give you my opinion at the end of the video. So for the purpose of this video, we're going to represent that we have a loan for $500,000, and we're going to represent that we just bought the property and our first payment is going to be in February, coming up February 1st. Now you could plug in your dates, whatever dates when you purchase your property, and you could look at, play around with the numbers and see what would make sense. And then I'm going to show you something that doesn't make sense that I see a lot of people do also. So most mortgages are for 30 years. So we're going to represent 30-year mortgage, and we're going to represent today's current interest rate of 3%. Okay, so if you notice, the payment is $21.08. But keep in mind, this is principal and interest only. It doesn't include taxes and insurance. Okay, so then I've had a lot of clients who have said, and we're going to continue, that has said, you know what, Carlos, once in a great while, I'll just make an extra payment. So once in a great while can mean every 3 months, every 3 years, who knows, right? So if we actually made one extra payment once in a great while, let's say it's just for one-time purposes, if you could, once we calculate, we could see that there's no interest in savings here, and you're not saving any time off of the loan either. So having a plan of once in a great while, it doesn't really work, and I've expressed this many times, and some people take it on and some people don't, and it's okay, but it's not a real plan, right? But it's an option nevertheless, right? Okay, so what about if we add one mortgage payment extra once a quarter? That would be very aggressive. And being aggressive would save you $96,000 worth of interest. So much money. And it would save you 10 years and 3 months. But it's so aggressive that most of us probably couldn't do this plan. Right? Every 3 months you're making an extra payment. That's kind of hard. Okay, so what about this other option here? What if we make one extra payment once a year? This is more feasible, right? And look at the big savings. You save almost $32,800, right? And look how much you save on the loan, 3 years, 5 months. So it's very significant, right? If you make one extra payment a year. What's challenging with that plan is that in December, at the end of the year, you'd have to make your regular monthly payment plus an extra payment. And remember, this is only principal and interest. If we add taxes and insurance, you're looking at $5,000 worth of mortgage payment. If you could do that, great. If it's a plan that works for you, great. If you're in a position to do that, take it on. Consider it. But I think most of us still is going to be kind of hard. To be honest with you, I couldn't even entertain that, right? But I'll get to it in a minute as to how we could make this work in our favor, right? Because you're saving $32,750, right? Okay, so how about this plan? This is a little easier. How about if we just pay $90 extra a month on your mortgage payment? Look how much you're saving. $18,604. So much money. Saving 1 year, 11 months off of your mortgage. Okay, but how did I get to $90 a month extra on your payment? Well, if you're anything like me, and you are part of the Starbucks statistic that drives by drive-through for a latte every day in the morning to go to work, Monday to Friday, that means if you get a medium latte, it's about $4.50, give or take $4.45 or whatever it is. So let's say $4.50 times 5 days times 4 weeks. In 1 month, you're spending $90 worth of Starbucks. Okay, it could be less, it could be more, I get it. Consider that your latte is costing you $18,000, $600 worth of interest. Okay, but giving up Starbucks may not be an option for most of us. I get it. Okay, but I said earlier I wanted to share an opinion of something that's more feasible, it's practical, it's easy to follow, and it actually makes a big dent. But this requires whatever your monthly payment is. In this case, it's $21.08. If you divide it by 12, gives us $175.66. Right? So that's your monthly payment divided by 12. If we add these to a regular monthly payment, you'll be paying $2,300 or so plus tax insurance. So you still also be saving almost $34,000 in 3.5 years. That's a lot of savings. It's a plan that is very easy to follow. So this plan is what so many times I've been asked this question, and then many times I've offered it without being asked. Probably shouldn't. This is what I practice. This is what I endorse. And I'll tell you, it works, right? This is probably the easiest plan to follow, unless you're willing to give up Starbucks, or unless you're willing to work extra hard and then put more money monthly or quarterly, or whatever the case may be, right? Or a big lump sum if you happen to get some extra money. But until then, $175.66 added to your regular monthly payment, it saves you $34,000 worth of interest. Something to consider. I hope you like this video, and I'm trying to post videos like these. These videos are really designed based on my experience in 16.5 years in real estate, and based on questions that I get almost every week. And so I try to post these on a video format once a week. So feel free to subscribe so you can get notified when the videos come up. And thank you for being here. I will see you in the next one. Thank you.